You know, when you start investing or trading on a stock market, the only thing you want to do is buy low, sell high, right? But usually what happens is you buy high and sell low. And buying when market dips actually a very popular strategy across the value-oriented investors specifically. And maybe all those followers of Warren Buffett and himself as well. Well, of course, it gives you a very nice discount on the shares you want to purchase, and it gives you better performance over time. But the thing is, it's very hard to predict when the market is going to dip, right? Nobody knows that. And most importantly, there are stocks that actually never go down, or they go down so rare that you cannot even imagine when that's going to happen. And it actually means that a lot of investors actually leave money on the table, slams the doors on the names that keep rising more and more because they're waiting for the dip to happen. But winners keep winning. And that is exactly the topic we're going to be talking about today. The stocks that keep rising, they keep winning, because in some cases, the stage is actually set for further wins again and again. And such a stage may not be fully reflected on the share price only. You need to look a little more deeper into the company's fundamentals, what they're actually doing, and what is going to be the future for them. Because how often you actually hear that this stock is at an all-time high, this company is all-time high, again and again, all the time. That is why we're not going to be looking only at the share price metric and its historical share price metric. We're actually going to be looking at the further projections for these stocks, how they perform, and what the sector they cover, and what they're going to be doing next. And before we jump into this and start looking at these crazy stocks out there, one thing I want to get from you is smash the like. Thank you very much. Subscribe to my channel, hit the bell so you're not missing out on the future videos like this. And let's keep going. And let's start with a fascinating fact. Did you know that the most profitable business is actually super boring, but very essential? That's right. And moreover, there are not a lot of innovation actually happening right now in this sort of businesses. And that is why this is the sort of business that lined up to be disrupted very, very soon. Think about cargo shipments or garbage collection or farming, things like that. And the first company on the list today is going to be something similar. And let's welcome to the stage TFII International, which is in less than load business, a trucking company that has been very hot in the recent months. And this boring transportation stock actually been up 100% since the beginning of the year and crazy 230% over the last 2 years. So yeah, this simple company and return like that, this is something. And of course, the pandemic that started last year actually brought a lot of attention to companies like this. They saw tremendous growth because of that. And what we are seeing today actually that when the economy starts to reopen, when the stores start to reopen, when the e-commerce start to slow down a little bit, that the company is still performing well, there's still a necessity of transporting goods as it was before. And why is that? Because the e-commerce is only starting to show its potential. And pandemic sort of brought us 5 years into the future to show what and where e-commerce actually can bring us, right? A lot of companies who are in this sort of business actually skyrocketed in the last year. And they're gonna do this even more going forward. And my personal prediction is that such growth and such demand in e-commerce is actually gonna stay. And not only that, it's gonna even grow further going forward. Maybe not in the current pace, of course, because it's been crazy over the last 2 years, but it's inevitable for it actually to capture bigger market share. Going back to TFII, the other thing that happened to the company just recently is that the company actually made a strategic acquisition of UPS Freight. And that's actually a big deal for them and for the trucking business in general. And currently the stock trades at 2x of their sales, which is still a bargain if you want to add this stock right now to your portfolio and hold it for a long-term period. And now if TFII is actually a stock that transports goods from one place to another, the next stock is going to be taking care of all the payment solutions that's happening before the shipment is made. And the company who is lined up for the best performance in this space right now, who's actually in a place to be 10x or 20x into the future, is NVEI. And this company is actually a very new addition to the stock market. They just IPO'd in September of 2020, so it's just been a year. And since then, they actually gained 250%. And the company just entered a very competitive space as well, where we see a company like BEP.UN, which is valued at $100 billion compared to NVEI, which is valued at around $17 billion, there's a huge potential for this company to skyrocket and also be at the same level as Adyen in the future. Because the main thing that actually helps out with this growth is competition. Because competition drives innovation. That's what the companies need in order to succeed in their business. And NVEI is actually capturing their market super fast. They're in 200 global markets, they accept more than 470 payment methods, they actually support 150 currencies, they support 40 cryptocurrencies as well, which means they're diversifying their solutions, they're making sure they can capture all type of clients at the same time. There are two other things that are happening with this company right now that are very important. The first one is that the company is actually planned to be added to the S&P 500 TSX 60 index, which is a big deal. It's the top 60 companies on the TSX. Crazy, right? And they're also just filed to be on NASDAQ. So they're going outside of Canada, like other tech players in Canada, moved to US as well and started trading on NASDAQ or New York Stock Exchange. So that's a big deal. It's gonna drive even more investors into their business. The company is gonna be even more popular and it's gonna get in their momentum right now. And the company just dipped around 10% recently, which is a great deal for all the investors out there. I'm totally looking into it and probably gonna add it to my portfolio with my next contribution. Now moving on to a more established, more of a blue chip stock company that is lined up for a great performance going forward as well. And also who is in a more future looking business. Not that others were not, but this one is about our planet and about how we're gonna survive as a humanity. That's such a big word. Alright, enough talking. This is gonna be about renewable energy, of course, and the best players out there right now. There are two companies like that. Is Algonquin Power. I talked about it before. It's a great stock. You probably should have it in your portfolio. I totally have it in mine. I love it a lot. It gives you a lot of dividends back. And the other one is Brookfield Renewable Partner. They're in a great position for investors right now who actually wants to diversify their renewable sources, their renewable stocks, with something else. And the company actually can show you a great historical record of great returns year over year, with an average return of 19% year over year over the last 10 years. This is crazy. The company actually exceeded their own goals, their own projections, where they thought they're going to be at around 12 to 15%. They actually did it at 19%. This is great. This is 2 times more than S&P 500 index. So the company is actually lined up with the same projections going forward. They also give you a nice dividend back around 3.5% per year, which is great addition to a normal growth of this stock. And their dividends are also growing year over year with an average rate of 6%. So this stock is actually not only good for growth investors, but also for dividend investors like myself. I totally have it in my portfolio and I'm gonna hold forever probably, or for a long-term period for sure, because I don't want to miss out on a 6% dividend growth year over year and also a total return of 20%, almost 20% year over year. And Brookfield Renewables actually, with their market cap of $13 billion, actually is one of the largest owners and developers of renewable power in the world. Across the world, they have hydro, solar, wind, battery, and distributed generation projects. And these are the top 3 growth stocks on TSX right now that I'm very passionate about, that I think is gonna explode and give you a ton of returns going forward. And if you wanna diversify your portfolio with some ETFs or dividend stocks to get your passive income to your pockets and all that, don't forget to check out my list out there. And until then, all the best out there. Smash the like, subscribe to my channel, hit the bell, and I'll see you around. As always, stay safe out there. Cheers, bye.